Okay. What do you understand when you say that you should maintain the reserves in the most flexible form? So when they say you should maintain the reserves in the most flexible form, it means that you should use the capital reserves before your revenue reserves so that when there are any future payments of dividend, you can easily do it. So when you use capital reserves first, then you will use your revenue reserves. It means you are using your reserves in the most flexible form. So the order of using reserves for the bonus would be you would first use your capital reserves. That means you would first use share premium and then you would use your retained earnings. Now let's look at the sum. You are required to prepare the statement of changes in equity and they have already given you the profit for the year. It is a sum of May-June 2020, paper 23. Okay. Now you have share capital, share premium, retained earnings, total, and your statement of changes in equities for the year ended 31st October 2019. You are given your details on the 1st November 2018. You have the ordinary shares, you have the share capital. When you divide your share capital with the face value, you will get the number of shares issued. So the number of shares issued would be 90,000 divided by 0.50. So it would be 180,000 shares you have. You will always make a note of the number of shares that you have. So whatever you have on the first date, you will just write it balance on the 1st of November 2018 and you will just go and write it in your share capital, write it in your share premium, write it in your retained earnings. You will add the three, you will get your total. You have paid a dividend of 0.10 per ordinary share. So you have 0.10 into 180,000. So the dividend paid would come up to 18,000. You should know that you always pay dividend. You will write dividend paid. You always pay dividend out of retained earnings. So it will go from the retained earnings and it will go from the total. It will go from the retained earnings and it will go from the total. Then company is made a bonus issue of 2 ordinary shares for every 3 held. You're going to pay 2 ordinary shares for every 3 held. What is the number of shares that you're holding? You're holding 180,000 shares. So what would be the number of bonus shares? It would be 2 into 180,000 divided by 3. So your bonus issue would be 120,000 shares. How much is your bonus issue? Your bonus issue is 120,000 shares. What is the face value of your shares? It is 0.50 per share. So you will give bonus of 60,000. Now you have to use this bonus how? Reserves were maintained in their most flexible form. So your capital would increase, share capital would increase by 60,000. But since reserves are maintained in the most flexible form, that means you will use share premium first and then you would use your retained earnings second. So 60,000 your share is increasing. Share capital is increasing and your retained profits would decrease. So first you would reduce 36,000 and the remaining 60,000. From 60,000 you have to use your profits. 36,000 would be out of share premium. So the balance would be out of retained earnings. So what is your retained earnings? 60,000 minus 36,000. So 24,000 would be out of retained earnings. So you have increased the capital and you have decreased your undistributed profits. Since the reserves were maintained in their most flexible form, that means you would sponsor this 60,000 first from the share premium, second from the retained earnings. You would sponsor the 60,000 first from the share premium, second from the retained earnings. Profit for the year is added to the retained earnings and it is added to the total. Then you would do your total and this would become your shareholders' funds. So your share capital is 90 plus 60 and your retained earnings would be the total of all this. This plus this would give you your shareholders' funds. Now the third part. State 3 advantage to shareholders trading as a limited company. So if you are trading as a limited company, what is the advantage to your shareholders? First advantage is that the limited company has a limited liability. So the shareholders are not liable to the debts of the business. Shareholders has a separate legal identity which is separate from the company. Shareholders will have a separate legal identity which is different from the companies, and shareholders can sell their shares, sell their ownerships easily. So they can easily transfer their ownership. You need to learn this and then do it. Okay. So this is basically a question of May June 2020, paper 23.